Sure.
Right?
Absolutely. I trust everyone has had all of the audit reports distributed to them previous.
Yes.
Okay, good. Well, thank you for meeting with us. We're here to present the 2013-14 audit report, and our opinion on actually each of the reports, which I'll go through, was unmodified, which is the best opinion that you could get on a set of financial statements. The current year includes all of the updated note disclosures and, of course, that infamous net OPEB liability another year. With all of that said, this district remains having a positive net position, which is not true for every district on Long Island. And the increase of another year of liability due to the net OPEB, which is really that big liability out there, the 30-year amortized amount of the actuarial estimation of what your post-employment benefits cost.
Can you give me the acronym for that?
OPEB.
Of the post-employment benefits. And for those of you who are unfamiliar, GASB sets the pronouncements for reporting and how governments would report. And with one of those pronouncements required, as they try to bring governmental financial statements in line with public financial statements, they've added these GASBs to try to bring these things on that otherwise weren't in their financials before. A number of years ago, it was fixed assets, which never appeared on the face of the balance sheet, long-term debt, which never, well, all those now appear, and they come down to the net position. One of the newer ones was other post-employment benefits, where through an actuary they quantify what you would, in essence, put aside today to fund your health benefits going into the future for retirees based on the age of your staff, the age of your retirees, the contracts that they've agreed upon. But what they hadn't given was a way to set aside money or fund that liability. So you bring this huge liability on, millions and millions of dollars. What they did do was say, you know what, you can bring it on 1/30th at a time. You're going to bring on a piece each year. So we're probably in the third, I think the third or fourth
More, yeah,
year.
maybe 7. Yeah, but it's since 2007.
Oh, okay.
But
yes.
it was $5 million.
And that's what we bring on each year as a liability with nothing to, in essence, offset that.
It's just carried over.
Right.
It
And so
accumulates.
it just keeps accumulating.
So it's 5 million, 5 million.
Yes.
It's about $105 million so far.
And that's a little different than EBOLA.
Yes.
Accrued liability.
The employee benefit accrued liability is the amount, both the quantified amount of compensated absences, that's accrued vacation and sick time for your current employees. And you do have an EBOLAR reserve, which you are able to fund for, and that is part of your restricted fund balance.
So this is for health insurance going forward.
The net
Yes, the
OPEB is
OPEB
for
also,
health
the paid-
insurance,
the paid premium.
retiree health benefits.
Now, what's going to happen, because this liability is going to keep growing, we can't
Yes, and
accumulate reserves for it, I guess.
one of the things that all districts are worried, and as Rhonda had started out mentioning, your net position is still in the positive of approximately $12 million. Many districts, even though they have a healthy fund balance, when you're bringing on a $10, $15, $20 million liability each year, your net position, while you may have healthy fund balance, is coming into the negatives on the bottom line. So there's nothing currently that can be done about that, and they're hoping, for ultimately a way to either fund that, or whether it be a trust, creating a trust to put money aside, creating a reserve to put money aside, or creating a, similar to a teacher's, like everybody pays in, a teacher's retirement system or an employee retirement system, where you would pay in a percentage and that would then cover those costs into the future. But currently there is no vehicle for funding that liability.
The important thing to mention, though, is that SAGO, like every district on Long Island, is on a pay-as-you-go basis, which means that the cost to provide health insurance to your current retirees is paid annually from your budget.
So why do you have to set up reserves for that if you're paying as you go?
Because what you're paying does not take into account the projected cost of that, the actuarial cost, the life expectancy of your retirees into the future. So actuaries get together and what your planned assets could you know, what.
But we're currently doing that as well, though.
You're covering
The
current-
retirees from 20 years ago, and we're paying as we go.
We're paying
Yeah, you're paying
current retirement, but we also have to cover future
Future
Yes.
retirement, yes.
If you put in the full amount,
But it's
that would grow.
It's just like
in-
kind of in case, theoretically, like we shut down today, we need to cover our liabilities.
No, what it shows is the commitment contractually, what you have made to retirees and what that cost is projecting into the future, based on life expectancies. And,
But
you
do you
know,
see what I'm saying? It's
Yeah.
kind of like an overlap, because you're paying as you go, and in the future, you're paying as you go for those liabilities.
yes, and you know, a lot of people, this is part of the district-wide statements. There are also schedules within the financial statements that show your annual budget and where your performance was on that. And I believe boards really like to focus on that, especially if there's no vehicle for funding. You know, some districts say, oh, that funny money, or that's just an accounting entry. But I guess what it brings to light is that contractually there have been commitments made, and that is something that you need to consider. That does affect a municipality financially.
And it's another way of comparing, and because every district has different contracts, things are negotiated differently, comparing one district to another, in that your liability each year is approximately $9 million, of which you're paying, I think your actual costs are about $4.5 million or $4 million. So that's why that number is growing each year by $5 million. A district next door, they may have an annual liability of $22 million based on their staff, and they're paying the same $5 million, so theirs is growing by $15 million each year. So what they've tried to do is, in essence, which was also part of bringing on fixed assets and long-term debt, helping to compare, making it easier to compare like districts, and also compare them with publicly traded companies in the outside. The easiest way I always equated it to was when they brought on fixed assets. A district that's buildings were falling apart but had $1 million in the bank looked great on the old financial statements, compared to the district that just spent $8 million rebuilding all their buildings and have no money in the bank. So under the old method, the district with cash looked great, the district with brand new buildings, you couldn't tell.
Yeah.
So this was another way of them trying to make it easier to compare districts throughout, as well as bring on to the thing, a true liability that you have. You promise that somebody who's retiring today is going to receive health benefits for the next 20 years. But there's no liability on your books that says we're going to pay their health benefits for the next 20 years. That's the OPEB, that's this liability.
Separate account.
But then if we were able to fund it, then you wouldn't be paying as you go down the road. You'd be you would be paying for those benefits out of that fund, I guess.
Well, until you were fully funded.
Yes.
So,
Right.
in the best case scenario, you would be funding your current and then some into the future. But in all honesty,
It's not gonna happen.
budgets are so tight, and you know you have other programs
Yeah.
other than retiree health benefits that you need to
Yeah.
allow for. So even if there was a funding mechanism, I don't know how much school districts currently would be able to
Could
put
even put
aside.
aside, and you would be taking money away from
Something else.
services
Yes.
to fund this liability.
But there are pages 42 through 44 have more information with regard to how that pension liability is calculated and the current contributions that you have. But like I want to emphasize, even with that large liability, this district is still in very good financial. You still have reserves that are being strategically utilized to help balance out budgets. The biggest hit this year was with your employee retirement system reserve. I think 1.4 was used to balance, and those rates have you're going to see those rates come down a little. So, you know, there's definitely a method to the madness in how to strategically allow for big spikes within the budget and how to use your current reserves and still maintain you know, some bit of a fund balance. You have 3.86, which is below the 4%.
And the controls
down
on
with
The controller's office is paying, looking very closely at all those reserves, many things.
Yes.
I think Northport is one of the ones that.
Yeah.
Or
And,
be criticized for it, and got away to tell them.
and you know, in 2 years ago, districts were on stress, you know, there were categories of stress, fiscal stress to look for, you know, that.
Ironically, the things that have been put in place to reduce fund balance and reduce reserves are what's creating a situation of fiscal stress going forward. So now there's two ends to report
And the
on.
controller is the one that was measuring fiscal
Yes.
stress.
Yes.
So those things that they're telling you not to do is what makes fiscals.
It's, you're either on one list or the other. You either have too much or you're fiscally stressed.
Yeah.
So it's,
I personally would rather be in a position where I'm able to make those hard decisions for my districts, the residents and the students, so.
TRS is going down approximately 4%.
yes.
That will help.
So, this year also, I just wanted to highlight that the school lunch fund, which you do maintain your own school lunch fund inside the district, had a fund balance this year. And it's harder with new regulations in terms of the food that is served. You had a little bit of a fund balance this year, so that was positive.
Part of that was the negotiation of the contract with food service workers. If you remember, the new employees under that unit get quite a bit, and $10 an hour less than current employees. Part of that is.
And to have a positive, it's a very difficult thing in school lunch, and most that are running their own programs are not as fortunate, and I know that's been a
Food
change.
costs are
Yes.
much higher,
And the food that you're allowed to serve, they pulled a lot of Alice Park foods away, maybe which is what the children buy and where you make your profits. And
They make it for more
Portion sizes are becoming, you know, to have a fruit, a vegetable, and a
vegetables.
protein.
You know,
you have to put it on whether the child wants it or not. Or
Right.
I mean,
Well, that's interesting, because I found that at the middle, at, you know, K-5, you have to put it on there.
Right.
Yes.
But middle school and high school, they
You
have
have
to
to
take
offer it.
You have to offer it, so it's, and a lot of it's getting thrown out, so I don't know if anybody's done a study as far as waste is
Yeah,
concerned.
I mean, the issue is more in the high school, that portion. They used to give them a whole wrap, now it has to be a half a wrap.
Or thirds, actually.
I don't know.
I'm not gonna start talking about the vegetables, but that's,
that's why my son comes home and eats another meal.
Yeah.
When he walks in the door.
You go half a wrap and then you go to track or something else
Yeah.
for 2 hours and.
and
You
you
know,
burn the
6'2".
calories. And you have a third of a sandwich to have a, you know.
Kids are not getting fat on school lunch, but that's just my unsolicited opinion, you know, it's, but, you know, it is all about the education process and about teaching nutrition, so I get it. There were also, the audit of the extra classroom funds, which, we can go over the management letter, which was very few comments, a lot of it, tended to be status of prior year, which we're required to remark on, but about approximately $220,000 went in and out of the extra classroom funds, and those are the clubs and activities that the students take part in.
Where was the management letter?
Oh.
Because we had it online, that's what.
Oh, okay. Well, I can, I have one here.
There are two letters. One has a paragraph and then there's an underlined statement right underneath it. That's not the management letter. That is
Management
our
letter is-
representation.
And the other one starts with, this letter is in conformity with the
Recommendations
clarified.
and status, is that the management letter?
It says recommendation
Yeah,
status,
okay.
that's management letter. So, again, the extra classroom, that's on the cash basis, that was an unqualified opinion. Although I do, bring your attention to this because when we speak about some of the management comments, it's very hard to control extra classroom. But predominantly, the remarks were about inactive clubs, and you can see that where you have an opening balance and an ending balance, and then no transactions, whether in or out for a particular club. And quite honestly, it's just indicative of a club that maybe is not active, but certainly it's not 100%. The law, because you could have a chess club that has some money, didn't need expenses, they're still meeting, they're still active for the purpose of which they're there for. But we do call attention to some of those inactive clubs. If they are, maybe they should be combined or eliminated. Certainly you do want to make sure that you have students that are actively participating in the clubs to make it worthwhile.
If you have student clubs that are inactive and haven't been active for several years, where does that money go? Does it go to another student account, or does it go to the general fund?
It would be based on a board decision or a board policy in terms of it would go to another student account. Typically, they bring it to the student government,
Yes.
and they're small balances. But
I'm more comfortable with that because
Right.
this is money that has been fundraised by the students.
Absolutely.
Yes.
And I would not be comfortable moving that to the general
no,
fund.
and it is, and those clubs that have been inactive for 3 or 4 years, those students are no longer here, but they move it to the student government, which benefits all the students in that particular location.
Usually classes will buy something at the end of their term before they graduate to honor something. But in those instances too, where there's no one there, it might go to an underclass, but it does always stay within the extra classroom funds, and it is driven by board policy in terms of the extra classroom. Typically, it is student government that the money goes to.
And that comes at a point where the students themselves had made it, because the graduating class could say, we have $800 left over, we'd like to give it to for the class that's newly coming in as a start. And that's a decision they can make, and the money would be transferred then and giving them a start. Or in the case of them, the position where there are no students available, the board and the policy would dictate, but it would stay with it.
And the middle school is much smaller. But there are some very active clubs, and they bring in a lot of money, and they disperse a lot. And we do take a sample of those, and that's how we develop our opinion, and also what we like to call the constructive criticism, maybe room for improvement and recommendations within the management letter.
The other comment that we had, which was a status of prior years, was with regard to the accounts payable and the transactions, getting the transactions ready for payment. We had noted that there were a lot of voids, just by errors made, clerical errors, nothing major. There was a marked improvement in that area, and I really have to, Eleni, who works in the business office, was very instrumental in reconciling all the open balances and for financial statement purposes, particularly at year end, but also throughout the year. So we have to mention that because she really worked hard at doing that. But there are still some voids, and maybe more voids than you want, and it's clerical errors that are being picked up. Certainly the bills are not going out or being paid incorrectly, because then once they pass one, they go on to the claims auditor who goes over everything and is processing just those bills. So it's sometimes easier for them to concentrate and maybe pick things up that were missed. So that was marked improvement, but we still put partially implemented to continue.
And I do know that this district is one of the few that actually pay bills weekly.
Yes.
So that certainly helps vendor relations, and even if you do have a void and maybe they have to wait an extra week or so, that is rectified then and put on the next warrant. But they are scrutinized by the claims auditor. We're here when we see that process taking place too.
We did
I guess
talk about
you'd be concerned there were no voids.
Okay, yes. We did mention the inactive clubs. We had said not implemented. I know attention had been given to that area, but there was still a number of inactive clubs, and it may have just been when the review was taken from the middle school or high school, they said, well, those clubs are still active. Let's see what happens over the next year. So again, since those same clubs are still left inactive, because I know attention in talking with the individuals involved was given to that area, but there are still some open clubs that remain.
And I did speak to John, and if it wasn't addressed, it's something that may already be addressed at this moment.
Okay.
Do you know how many there were?
It was about 7. You can tell from the extra classroom report where I said the beginning balance and the ending, and then there's a dash in between.
There's some there that are active clubs that just didn't do
Like I
it
did
the
give
money.
the example.
There were five in the high school that are inactive.
Okay.
I already checked them, and I believe one into the middle school.
Okay.
Yeah, the middle school they don't have a lot of clubs to begin with, but, so.
Sometimes nobody's willing to pick up that club, you leave it there and hopefully next year somebody else will pick up that club. The current year comment with regard to extra classroom activities was just greater documentation and mostly in the receipts. And when the students are signing off on everything, there seems to be attention, and that's really what the state looks for is student involvement, and there is within the extra classroom activity funds. However, from an audit perspective, we were asking for more description in terms of when a deposit is made by a particular club, more description in what was it for, if it was for the sale of tickets, how many tickets did you sell, and how much were the tickets. So more of a descriptive detail and any support that can be given with that. And that was from a management perspective.
And you would be disappointed if we didn't have another GAGAS update, because they're not coming as fast and furious.
No.
But GAGAS 67 was implemented this year, but that really concerns the retirement systems themselves in terms of their reporting. GAGAS 68, you will see in next year's audit report more note disclosures that will show each district's proportionate share of what their liability or asset is for either the employee's retirement system or the teacher's retirement system. You'll have both of those.
It will be information that is provided to you by those retirement systems. And fortunately, in New York State, many other states, because these GAGAS pertain to all governments, not just school districts, and not just New York. In New York State, we're almost fully funded, I think 97% fully funded on the teacher's retirement and 100% on ERS. So you may be showing a liability and an asset, that's greater than your liability, and on the teacher's retirement, almost a break even in terms of liability and asset, which is unique to many of the pension systems for public employees that we
Because the
see
Government
throughout the
Accounting
country.
Standards Board promulgates laws and for all of the United States, not just New York State. It's all governmental financial statements that are issued. So
It's been painful, but it's in the right direction.
absolutely.
I don't know that the TRS has ever gone too far underfunded. It's always overfunded for a while.
Part of the Constitution of New York State is that it's fully funded. So both ERS and TRS are always fully funded. Where in the other states,
They have the option.
the government has rated the funds from the retirement system and put them in the general fund, or not funded it fully.
The only thing that you would question was when we had a big downturn in the market, they had lost a percentage of their assets that were invested, and that's why you would see rates that escalated, and they had a 5-year plan. We're gonna have you contribute more than what it's earning for the next 5 years, and this is the last of the 5 years, and sure enough, next year we're seeing those things start to come down. So
I remember at one point, we were fully funded, and then we had interest, and if we put the interest into the that account, we would be penalized because we'd be overfunded, and then we put it in our general account, and we were in trouble because you shouldn't put it in the general account, so I don't know where you're supposed to put it.
that was with the
Yeah, the
Everlaw
retirement.
Reserve.
Yes,
Yeah,
yes,
yeah.
yeah.
Yeah, the Everlaw fund, you're kind of caught between a rock and a hard place there.
That was before you had really the net OPEB obligation come on board, and it was understood that you could fund both in that reserve, and then further clarification had come out. And it was every district that had put money aside. They said, okay, we're going to be addressing both of these issues. But then anything that really pertained to what was for the health insurance could be used to reduce budgets if you needed it, and there was some districts that
All those districts that were fiscally sound put more money into that Everlaw, which is now only allowed for compensated absences, than they, in anticipation of the OPEB and the post-employment benefits, and then only after it was there were they criticized, and it's a major, I think it's a class 1 misdemeanor, or if you remove money from that fund for other than compensated absence. So now you're stuck with it. You can't take it out, and so, but then they create, you can take it out for certain purposes.
But the state will
And there
determine
was some
whether you're
legislation-
overfunded or not. and you have to
And
provide
some
it.
legislation that allowed us
that.
to move it from temporary borrow from the Everlaw fund to.
I have a dumb question about OPEB. Are there any precedents statewide or nationally where contracts have been opened up as far as people that have retired and they had to pay into the system where they weren't paying upon retirement?
Not that I know of. It's once they retire, it's very difficult to change their, you can change it for everybody going forward, but they're kind of locked in.
And contracts are so different. What I have seen in more recent years is the percentage of contributions higher while someone's actively employed, and then when they retire, that amount would go down. And it's withheld from your retirement, your pension. The only other audit that we had conducted was for the federal single audit, and that is when currently your federal funds exceed $500,000. The total federal funding that the Sago District received was about $1.1 million. And there were no corrective action plans. We did not find any concerns or issues, or, you know, we need to question costs. We need to, whether it be very small or not, we can't.
There's no materiality as there is in an audit.
So we report on everything, and there was none found within our scope. So, yeah, like I said, it was all very positive, and we're just a few minutes over.
Okay.
It's over.
That's good.
It's all night long, I know.
Can you do this one more time? Because
But by all means, if you have another question or something, please feel free to reach out to us. You know, you can call us at any time if there was something that you felt we glazed over or you had an additional question or more.